Okay, welcome everyone. This is Cynthia Tomaine with Interactive Brokers, and thank you for joining our webinar today. We'll get underway in just a few moments, so we'll be with you shortly. Okay, everyone, I am ready to start. And I'd like to welcome everyone to today's session. Thank you for joining. Do want to let you know that notice in the right-hand side of your screen, there is a questions panel that's included in the control panel. You'll see a questions title bar, and do want to let you know that that's how you will be able to communicate with us throughout today's session. So if you do have any questions or comments, please go ahead and add those into that questions panel, and we will be addressing any questions that you might have at the end of today's event. I also do want to let you know that we will be recording today's session, and each of you will get a direct link to today's recorded playback soon after the webinar ends. So if you do want to come back and review any of the concepts that Kenneth is going to be discussing today, simply watch your email later on for a direct link to today's recorded playback. So let me leave this, first of all, on our disclosure slides while I start that recording equipment, and we'll go ahead and get underway here today. Well, hello, everyone, and welcome. Thank you for joining today's webinar with AQUMON on the investment for the super rich versus the masses, and AI bridges the gap. I'm very pleased to have with us this afternoon my colleague, William So, from our Hong Kong office, who will be introducing today's speaker. So over to you, Will. Thank you.
Okay, welcome everyone. So I'm very excited to introduce today's presenter, Kenneth Shea. So he's the head of sales and marketing at AQUMON. So his company is dedicated to researching how AI can empower everyone with professional investment services. And I know Kenneth because AQUMON uses interactive brokers to execute their client trades. And prior to working at AQUMON, Kenneth was a director at a European private bank with over 15 years of experience in wealth management and investments. So today he'll be sharing with us his thoughts on the irreversible trend of disruptions in the wealth management industry. So with that, I'll pass it over to Kenneth.
Yep, thank you very much, Will. Really appreciate that. Let me just start by saying good afternoon here from Hong Kong. My name is Ken Shi, and as Will mentioned earlier, I am the head of sales marketing at AQUMON, a robo-advisor based here in Hong Kong. And today's webinar will be discussing how a robo-advisor can finally help bring proper wealth management services to the masses at scale. Now, previously, these services were really only available to the ultra-high net worth or high net worth type investors, aka the super rich. Now, on top of that, I will also introduce to you some of the artificial intelligence or AI-related solutions we offer to clients here at AQUMON. And for those of you who are interested or ready to go to our webpage to check out, our webpage is AQUMON.com, AQUMON.com. Or if you want the full experience, you can download our app, both on the Android and iPhone store. Or if not, also go to our Facebook and LinkedIn and Instagram page as well. Maybe as a first start, for those of you unfamiliar with what a robo-advisor is, basically is a digital investment or wealth management platform that has the ability with little human intervention to assess, client risk profiles, then automatically generate optimal portfolios, along with the ability to execute, monitor, and rebalance such portfolios for investors. Now, they're able to do this because they're mainly backed by powerful computer algorithms and not mainly by not really human-intensive like traditional investment platforms. Now, to me, this is actually pretty much a natural digitization evolution, much like as we saw with the case with online shopping or ride-hailing, and it just makes something that was previously hard to understand or hard to access, but now makes it much more easy to understand and much more accessible for the average investor. Now, maybe if we're looking at our home market here in Hong Kong, for those of you interested, the potential of how much the robo-advisory business can address, I want you to remember a simple percentage, and that is 97%. The shocking truth really is that according to a PricewaterhouseCoopers report last year, they identified that 97% of Hong Kong's population doesn't have access to the proper wealth management services. Now, AQUMON, along with our digital wealth management platform, looks to change that. Now, looking beyond Hong Kong and putting the Asia market size in dollar terms, according to a recent report by IDC, within the next 3 years, there is about US $500 billion market where of market size where their investment needs are unaddressed at this point. Now, AQUMON is already positioning for this. In the past 2 months, we've already entered the mainland China market and also actively looking at expanding our footprint to the regional markets here in Asia. Now, for people in Hong Kong that don't have access to wealth management services, what does their return profile look like? Now, although clearly we all wish we invested like Warren Buffett, the point we're trying to highlight really is that the mass population of Hong Kong mainly uses their MPF, or what we call the Mandatory Provident Fund, which is the same as the 401k in the US, and generally speaking, lags behind the returns of investors in higher income brackets. Now, part of the problem really comes down to the lack of tools for retail investors. Now, most people in Hong Kong, besides their retirement MPF account, may only be trading a few individual stocks like household names like HSBC, Tencent, or Alibaba, or maybe buying a few limited long-only investment funds. Now, this actually applies to about 7.1 out of the 7.3 million people here in Hong Kong, and is showcased by the left-hand side of the slide, the white segment of the slide. Now, beyond retail investors, you see that only 3%, represented by the middle all the way to the right, which represents the ultra high net worth or high net worth investors who have access to a much more comprehensive range of investment tools. Now, this is the problem that AQUMON is trying to solve. For those of us in the wealth management industry, now one of the main hurdles that makes the masses hard to assess these wealth management platforms really comes down to them being very people intensive. Now, I think for, when we add up all these professionals that are on this platform and on naturally their salary, chances are this translates into a much higher entry hurdles and fees that get passed on to the end users, which are naturally retail investors. Now, passing on these costs, what exactly does that result in? Well, at least in Hong Kong, it's not uncommon to see minimum investment size for a private banking account anywhere in the range of $15 to $20 million Hong Kong, or about $2 to $3 million US, and annual fees that range anywhere from 2 to 3%, maybe north of that, depending on what services you choose. Now, as mentioned, robo-advisors such as AQUMON are technology and not human-intensive platforms, and this completely changes the game for investors. Not only are minimum hurdles much more accessible now, AQUMON's minimum right now is 40,000 Hong Kong dollars, which is about $5,000 US, or if you do the math, that's about 1/500th of the hurdles at traditional private banks. Now, fees are essentially less than 1%, which is close to 1/3 of the fees of traditional private banks. Naturally, to be fair, we also offer investors, what we currently offer investors is something that's smart, low fee, and transparent. It's a multi-asset investment option, investing into stocks, bonds, and commodities. But at a private bank, they may still offer more complex solutions that robo-advisors at this point cannot offer yet. But naturally, this may change going forward. And I think although robo-advisors can't invest quite as successful as Warren Buffett yet, but at least looking over the past decade and a half, our back-tested returns do offer investors much better returns than if it did themselves. So we're comparing the white MPF return to the robo-advisor return. Now, furthermore, I think what's important to also highlight is the fact that we're doing on this while taking on less equity risk versus a traditional equity-only portfolio. don't worry, I'll talk a little bit more about updated performance figures shortly into this presentation. Now, for those of you wondering, is this robo-advisory business actually proven? Now, outside of Hong Kong, particularly in the US, chances are people may be already familiar with robo-advisors such as Betterment or Wealthfront. Those already capture a sizable part of the overall passive investing market share. And if we're just looking at the US market alone, a recent study by Deloitte estimates that by 2025, so not really far away, robo-advisors really could be managing anywhere north of 5 to 7 trillion US dollars from where they're managing right now, which is about 300 billion US dollars today. Now, that essentially represents a 10 to 15% total market share of total retail financial asset under management. That's a huge part of the market that people can assess. But chances are you're asking me right now is that looking at all the different robo-advisors, what's the difference? Now, we want to highlight to people that not all robo-advisors are created equal. We think a big differentiating factor is the ability to have both your algorithm and IT team to be in-house. Now, having in-house IT support makes sure that you can keep your offering to keep improving quickly and not held up by third-party vendor-type limitations. We think this is quite important. Now, furthermore, I think with how financial regulation continues to increase, securing the licensing is also a key factor in terms of success for robo-advisors in different regional markets. Even for us, I think we actually took quite some time to secure our own license as well. Now, lastly, I think the track record is also very important, and I'll go into this a little more shortly. For most investors, what we do is we see in Hong Kong is that they're generally much more trading oriented, and we feel this negatively impacts their overall risk-reward experience. Now, for our most basic solution here at AQUMON, we're offering a multi-asset, so as I said earlier, investing into stocks, bonds, and commodities portfolio to better help our investors achieve a much smoother risk-return profile. The portfolio itself, we feel, is a core solution for most investors. It mainly invests into highly liquid exchange-traded funds, ETFs. The value add that robo-advisors really can offer from people just picking it themselves is really how we can use algorithms to more smarter select and automatically monitor and rebalance portfolios for clients, yet in a package that has low investment minimum, low fees, and high transparency. What we often find with many investors here in Hong Kong is they don't adopt what we call a core satellite strategy, which is adopted by many ultra high net worth and high net worth investors, but more so I would say they use almost like a full satellite strategy, mainly very heavy equity heavy in their own portfolios. We hope by making these simple yet powerful investment tools available to the masses, investors can have a much better investment experience and overall returns. Now, if we look at the 2018 markets, they really have been very choppy after a wonderful 2017 experience. Now, I apologize for the outdated performance figures here since we had to send this slide pack a little while back, but maybe just updating the newest figures is as of this week, for those of us invested mainly in equities, the MSCI index is down about 7%. The US S&P 500 is down about 1.4%, and here in Hong Kong, the Hang Seng index is down about 12.4%. So essentially, what I'm trying to highlight is that equity-heavy investors, at least in the year of 2018, don't really have many areas that they can claim performed positively. But in comparison, I think it's important to mention that AQUMON's robo-advisory solutions this year, by taking a diversified low-fee approach, has given investors a much better investment experience in 2018. Now, our most aggressive global portfolio, investing in about 80% equity, is only down about 6%, so outperforming the MSCI world. And on top of that, our most conservative portfolio, so investing in 20% equity, is only down about 1.3%. So from very home-based investors here in Hong Kong, we feel taking a global yet liquid low-fee approach is a winning combination. Now, many investors, chances are, after this year's experience, they're probably curious how AQUMON holds up in times of market stress. Now, just looking at the past decade, as you can see from the chart, by the orange line of the chart, our returns overall actually have been quite favorable. But I think maybe the more important thing to highlight is really the reduction in volatility and also maximum drawdowns, which will achieve a much more smoother return for investors who adopt this approach. Now, particularly for a lot of investors who had kind of a bad experience this year, maybe taking this type of approach really will offer them something of a better experience. Now, I think beyond not having the tools to actually properly invest, I think maybe one thing to highlight also is what are the hurdles robo-advisors such as AQUMON can help investors with. Now, essentially, AQUMON is leveling the playing field for most investors. Now, right now, a common problem is that there's almost too much investment data out there. And as an investor, honestly, it would be wise of you to at least make sense of that information before you make your investment decisions. Now, furthermore, the playing field isn't exactly level because as an investor, you used to really face other investors. But I think this is really no longer the case, and most human investors right now are facing much more computer-based investors. So just to level the playing field for yourself by allocating at least a portion of your portfolio to a smart machine-based solution, we think makes a lot of sense. And to help build and monitor the perfect portfolio for our clients, AQUMON is constantly analyzing multiple sets of data from Bloomberg, from FactSet, from Wind, and also factors like fees, asset correlations, and exposures, which is impossible for an average investor to do themselves. On top of that, to achieve full diversification, I think correlation is something that's quite important. Now, here at AQUMON, our system mathematically calculates and in turn selects assets for our investors so that their portfolios are truly diversified from a correlation standpoint. Now, for an individual investor to do that, this would be pretty much impossible. Now, I have here just a simple visualization in 3D just to really kind of showcase the difference between a regular investor and I would say, a math and algo-based robo-advisor. So for a regular investor, chances are when you have invested in what you deem a fully diversified portfolio, chances are it's not really diversified. And maybe I should highlight that the orange points here represent different assets, and the distance, which is the gray line between the orange points, represents how diversified they truly are. So just to kind of visualize is that, here at AQUMON, since we're using a much more math algorithm-based approach, we're able to truly offer a diversified offering in terms of portfolio for our clients. And ultimately, AQUMON is really just trying to improve the risk return for our investors. Now, most of you are probably familiar with the efficiency frontier, which represents the best risk return combination. Now, most investors probably are investing somewhere in the range of the white dots, meaning that they're either not getting enough returns for the amount of risk they're taking, or they're taking too much risk for the amount of returns that they're getting. And here at AQUMON, we're just trying to help investors achieve and further continue to achieve the best risk return profile possible. I think lastly, maybe a big advantage we think that we offer is the ability to constantly monitor and adjust our client's portfolio, particularly in volatile years, just like this one. Now, our app actually will periodically suggest to our users that they need rebalancing when correlations or exposures start to drift away from ideal levels. Now, naturally, you can say that you may select as well as a robo-advisor, which is highly unlikely, but let's just say even if you say that, but the ability to monitor is something that we think is a major advantage, particularly in choppy years like this one. Now, I think an important thing to come back to is just thinking about is that, yes, this is a smart-based solution, but maybe this is not so AI-based. And you came to this overall presentation to learn about what are some of the artificial intelligence-based offerings that we offer here at AQUMON. So I want to let you know that just right now what I talked about are our multi-asset, diversified solution that's already available on our app or on our web-based solution. Beyond that, that's only the tip of the iceberg, and we've got a whole host of solutions that AQUMON plans to offer to the masses. Now, currently, our business model is split into two. On one side, we have our B2C, which is the one I've been talking about earlier, which is available to our retail investors through our app and through our online platform. But we also have a B2B model that is basically facing financial institutions and asset managers. And we think on our B2B side that our smart AI-based solutions are really offering something that's very exciting opportunities that we plan to roll out to our retail investors also. Now, currently, just to kind of give you a little taste, is we have a multi-factor-based investment solution using machine learning to select a portfolio of the best performing stocks here in Hong Kong, one solution, and another in mainland China A-share market, which is another solution. And essentially, in a nutshell, what we're trying to do is we're trying to see is that the strategy identifies what are the best factor styles over a certain period, then regresses in terms and identifies what stocks are likely able to outperform in the next period. And in this case, it's a monthly period. Now, both these strategies this year, both we're talking about the Hong Kong and China A-share market, are able right now to outperform the market by over 20%. Now, naturally, I'm not sure we can continue this every year, but we think this should get people very excited. Now, on top of that, we also have other smart strategies where we're intelligently rotating between regional markets or sectors. And we use a mean reversion-based approach for this. Now, basically, both these strategies have shown quite a lot of promise. Particularly the one rotating between regions is really outperforming by, I guess, quite a bit more. Now, on top of that, I think for clients that may want something more yield-oriented, we also have a smart deposit type strategy, which selects fixed income type investments yielding 2 or 3%. Now, in the current investment climate for clients that may be a little bit more, I would say, concerned about how they should be positioned and are just looking for something that's a little bit safer with some decent yield, this may be something that might be quite interesting for a lot of our clients that we're planning to roll out in just a month or two. So there are also another host of strategies that we're working on, but I'm looking forward to the next time I get to share with you all the new exciting offerings for our retail investors. Now, we think AQUMON, with our multi-prong approach, particularly offering AI-based alpha-seeking strategies focused on the Hong Kong-China market beyond just our global passive portfolio solutions, which we think are great, but let's just letting you know, we've got more than one tool in the box, allows us to live up to the idea of being a major player within the Asia robo-advisory market. And as I mentioned at the very beginning, a lot of these tools were actually available only to what we call ultra high net worth or high net worth investors. And we're just thinking about how we can use technology to bridge that gap to offer this to the masses at scale. So thank you very much for listening today. And if you have any questions, please do find us on our website, which is AQUMON.com, which is spelled AQUMON.com. Or if you're looking for the full AQUMON investment experience, please download our app, both on the Android store and the iPhone store. And last but not least, check us out on Facebook, LinkedIn, and also Instagram. So thank you very much for listening today. And if you have any questions, please do reach out to us. Thank you very much.
Well, thank you, Ken. Appreciate all the information you have provided today. A quick reminder, we have been recording today's event, and each of you will get a direct link to today's recorded playback soon after the session ends. So if you want to come back and review the concepts that Ken discussed, simply watch your inbox later on today for that direct link. So with that, we are going to conclude our session here today. Thanks so much to Ken Shi and my colleague Will So out of our Hong Kong office. And thank you all for your participation. Have a great rest of your day, everyone.